Hey everyone, in this video I'm going to answer if I think BLNK charging stock is a buy on the dip. Of course, BLNK charging stock is down significantly off its high of $60 per share. It's now down to about $3.83 per share. It's down an additional 10% today on the back of some bad news that came out from ChargePoint, one of its rivals, and that's bringing down BLNK charging stock as a result an additional 10%. So in this video, I'll cover the company's latest results. I'll look at some other financial metrics, including valuation, and then I'll answer if I think BLNK charging stock is a buy right now. So let's get started.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So in its latest quarter, BLNK charging had what I thought was a good quarter. Total revenue increased by 152% to 43 million. Service revenue increased by 119%. Its gross profit margin jumped by 175 basis points to 29.5%. So the company made solid progress in its critical metrics going forward. However, there is an however, and that's what I'll talk about for the rest of this video. The company's quarter, in fact, was so good that it raised the target for the rest of the year, making the target up to 128 to 133 million. That was up from a previous target of 115 million at the midpoint. So a significant increase of its 2023 revenue target with just a little over a few months left to go in the year. That's just how good its latest quarter was. So BLNK charging, like its rival ChargePoint, is targeting positive adjusted EBITDA by the end of 2024. The way it aims to achieve this target is by adding competitive chargers and services and the ability to satisfy customer needs and timelines, enhance robust sales, and improve its expense management and ongoing process optimization. This last one is the one where it's having the most difficulty. Losses on the bottom line are mounting, and I'll share a little bit more about that a little bit later in the video. So here I have a chart of an interesting outlook for the forecasted global passenger electric vehicle fleet. Now we have here in 2021, just 11 million vehicles were electric vehicles in 2021. The estimate suggests a range of between 56 million, and 83 million electric vehicles on the road by 2025. That is an optimistic forecast even for the lesser of the two scenarios, suggesting 56 million vehicles worldwide becoming electric vehicles. And if you take a deeper look into this forecast, let's say, all right, so vehicle sales have averaged about 65 million over the last few years. So let's say 10% of 65 million continues to be electric vehicles over the next 3 years or so. And that would mean about 6 million per year EV sales, so about 18 million EVs. You can round it up to about 20 million EV sales, and that would still not get you to that lower scenario of 56 million EVs on the road by 2025 if you add that to existing EVs on the road. So in this forecast is an assumption that the percentage of vehicle sales worldwide will increase from the 10% of vehicle sales that were EVs in 2022. I don't know if that's going to be the case. You've got, remember, 10% of EV sales right now that are being supported by thousands of dollars of government incentives. Those incentives, will they be around by 2025? I don't know if they will. I don't know if the government will need to scale them back a little bit. But even with those incentives, you've got it at 10%. And I'm going to show you another stat. In fact, let me show you that stat now. That in 2023, it was only 8% of all cars were electric vehicles in 2023. So it's moving down, not up, as a percentage of overall sales. In fact, in 2022, 2021, I would argue the percentage of sales of EVs were inflated because the traditional internal combustion engine vehicle suppliers had significant constraints, so they weren't supplying the market with as many vehicles as usual, and so that skewed the market in favor of electric vehicles temporarily, in my opinion. Why do I say temporarily? Because electric vehicles are still only desired by relatively few people purchasing cars. According to these stats, more than 9 out of 10 people prefer a traditional internal combustion engine car. Now, one of the reasons for that, and I think one of the primary reasons for that, is the incredible inconvenience of charging. So, when considering so EVs require an average of 61 hours of charging each month. 61 hours of charging time each month required by EVs. Whereas if you're filling up gas, it only requires around 30 minutes of refueling per month. Think about that, 30 minutes versus 61 hours. That wide disparity is, in my opinion, the main reason for hesitation before buying an electric vehicle. And oh, by the way, electric vehicles are also more expensive. And oh, by the way, the charging stations are significantly fewer than the gas stations, so you have to go searching for those. And oh, by the way, and on it goes. There's been reports coming out showing how significant a percentage of these charging stations are down. They're not working. So you go to a station that has 20 charging stations, and it's common to see 3, 4, 5, 6 of those charging stations not working. Whereas if you go to a gas station, yeah, a lot of times you'll find gas stations that are out of service and pumps that are out of service, but not at the percentage where you're finding charging stations out of service. So all of these reasons are adding up, and it's making people hesitate before they buy electric vehicles. Those who are fans and those who already wanted it have gotten in and bought it, but to get to widespread adoption, they've really got to make progress on the other side, on the infrastructure, on the convenience, on the technology, on the supply chain before they can get widespread adoption. And so I think these forecasts were optimistic, to be sure. Interestingly, what's been working for BLNK is that it has a multitude of options depending on the scenario to serve. You can see here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 different charging options for the various needs of its customers that need charging for their electric vehicles. Now, this helps them gain traction in terms of making sales, in terms of filling customer needs. But on the other side, it hurts in terms of profitability because now you've got to develop all of these different options, and you're not going to scale up any one option because you're not going to just say, all right, this is the model. We're going to make millions of this one model. And as we build more and more of this one thing, we'll get better and better at building this one thing and decrease our costs. So it's a kind of give and take you've got to adjust with in terms of serving the market. You give the market more options, the market likes it, you're going to generate more sales. But on the other side, it's going to be harder for you to produce these products at a low enough price to generate sufficient profitability. And that's really been the story for BLNK Charging. Is revenue is great, right? I have here product sales increasing 162% year over year. Service revenue increasing 190%, 119% year over year. Total revenue is up 152%. Gross profit is up, yes, 167%. But when you look at operating expenses jumping 322%, going from 29 million up to 123 million, you can see the losses starting to add up on the bottom line. And that's why you don't see BLNK Charging talk a lot about net profit, net income. They focus on gross profit because, yes, they're becoming gross profit positive, and so they're going to highlight that metric and talk a little bit less about net profit. And here is that metric that I mentioned, net loss, and you can see the net loss increasing by more than 4 times year over year in the third quarter, from 25 million up to 112 million. So while it may look impressive, the gross profit gains the company is making, it's still losing a lot of money on the bottom line, and those losses are increasing. They're not working in its favor. Additionally, to support the losses on the bottom line, the company has sold a lot of shares of stock, diluting shareholders. its shares outstanding increasing from about 18 million in 2019 all the way up to 46 million in the most recent update. The reason this is bad news for investors is because if or when the company does become profitable, it needs to split those profits among more shares, and so earnings per share will be lower. And then finally, looking at valuation, Blink Charging is trading at a forward price to sales of 1.5, roughly about where it was trading at around 2020 before all the hype around electric vehicles started. And in my opinion, there shouldn't have been that much hype around electric vehicles in 2020. If you had been reading my articles or if you had been watching my videos, I had been saying that like this is overdone, this hype is unsustainable, and now it's back down to prices at 2020 levels. So it's not like the price decrease has brought it down to such a bargain valuation. That's not the case. I don't think that's the case. And so to answer if I think Blink Charging stock is a buy, I will say no, Blink Charging stock is not a buy right now. Right. But if you gained any value from this video, please subscribe to the channel. It'll really help support more videos just like this one. Thank you for watching.